Good afternoon, everybody. It's a real pleasure to be here this afternoon. My name's Kieron. I'm the Chief Executive of the Impact Investing Institute, and our vision is of capital markets that support a fairer, greener, more resilient future. Now, the premise of this panel on adaptation finance is something that my wife tells me I'm totally incapable of, which is focusing on more than one thing at once. But hopefully you'll all be much better at it than I am. And that's because one of the hardest truths about the net zero transition is that even if we achieve it, the effects of climate change are set, even if we were to achieve our carbon mitigation goals tomorrow. 2023 was the hottest year on record. Climate impacts such as floods, heat waves, and food insecurity will continue and will affect our homes, how we work, how we live, in fact, pretty much every aspect of our lives. And that's why the second goal alongside decarbonisation in the Paris Agreement was adaptation to the impact of climate change on people and the planet. But we know that there's a significant gap in adaptation finance, especially in emerging and developing economies. So to prepare for that, we need capital, substantial capital, and particularly private capital to invest in the resilience of communities, economies, and infrastructure to withstand those what are going to be more frequent climate-related shocks. And that's an issue both of equity and of strategic investment. Equity, because climate change disproportionately affects the most vulnerable populations, those with the least resources to cope, and strategic investment, because every pound spent on adaptation can achieve many times that in avoided damages and economic gains. Put simply, adaptation isn't just a moral imperative, it's a financial reality and necessity. So this fireside chat we're going to have today is going to look at the opportunities for private capital to support adaptation, looking at, is this just a risk mitigation strategy? Are there opportunities that can be leveraged if we invest in adaptation now? What are the best examples of the private sector in successfully investing in adaptation? And what does this all mean in the run-up to COP29? And what better place to discuss it here than the City of London, with its pivotal role in global markets, green finance, and impact investing. So let's get into discussing what's needed. I'm delighted to draw on the expertise of this fantastic panel that we have with us. Dr. Nicola, as we've heard, Director of the Resilient Planet Finance Lab at the Environmental Change Institute. Amal-Lee, Managing Director and Head of Climate and Diversity and Advisory at British International Investment, and Matt Gantley, CEO of UCAS, the UK's national accreditation body. So we're going to just move to the questions. You do also have Slido with you, so do please put through any questions that you would like of the panel. So Nicola, as we were preparing to come on stage, we were discussing how the risk of climate change is well understood. We're seeing momentum, perhaps not quick enough for everybody's liking, but we're seeing momentum towards net zero targets. But adaptation seems to be trailing rather far behind, especially in the business community, and might often be seen as a defensive strategy. So is it just that? Is adaptation finance just a risk mitigation strategy?
Thanks very much. Maybe I'll ask a question actually to the audience first. How many of you are already thinking about adaptation in your work, or thinking about how to? Okay, actually, so I think we've proved the business case then, actually. Well, and how many of you actually think there is a business case for investing in adaptation now?
For those joining us online, interestingly, more people put their hands up to the second question than to the first.
Well, that's a good thing.
Yeah.
That's a good thing. Okay, so I guess where is the business case? Is it just about risk? Is it about opportunity? So the first thing I would say on this topic, which may sound a bit left field, but I always say it, is adaptation is not all about building flood defences. And why do I say that? I say that because when we often think about adaptation, we think about building flood defences, building more resilient hospitals, etc. All of these things which are actually traditionally public, and they all tend to be things that require a high upfront cost to long-run benefit. Actually, those things are not what we need to think about when we're thinking about private adaptation finance. So yes, we do need to mobilize more finance into those areas as well, but actually the vast majority of adaptation that needs to happen will happen in the private sector. And every business will need to think about how it is adapting to the climate, how it is taking opportunities from the changing climate, how it can support a resilient future, and the opportunities in that. And that means actually this is an enormous opportunity. Every government, every city, every business is going to be thinking and having to invest in this resilience transition at the same time as a net zero transition. And there is a huge opportunity there. And actually, we already see a huge opportunity in this space. So, for example, of all of the green bonds issued, around 16% of that is actually already going into adaptation. If you look at corporate disclosures at the moment, around 50% of them are already mentioning adaptation in some way. So 50% of firms are already thinking about this. Actually, though, if you look at, say, what's happening in the sustainability-linked bond market, only about 3% of bonds and loans in those markets are looking at adaptation. So actually, there's a gap between 3% issuance and 50% of companies thinking about this. Again, a huge opportunity there to really grow these markets over time. So I think there is a huge opportunity in this area. And as you've said, we see the returns that can be seen in this area versus the costs. I think another challenge with adaptation versus, say, mitigation is a lot of adaptation is not necessarily about a what, but about a how. So it's not a new type of activity. There will be some new activities in adaptation. So, for example, some new innovations around drought-resistant crops, for example, new types of data that we need. But a lot of it is about how we do our existing business operations investments. So a lot of it is, for example, we're investing 2.7 trillion in infrastructure every year as a world. We need to make that resilient. So it's about how do we do that. We're investing around 5 to 6 trillion in agriculture around the world that we need to make resilient. So it's about that how do we do that. And there is huge opportunity, because if we're not doing that, then actually we're seeing huge increases in the risks in those key areas. So I guess that's a key point. But just coming back to the risk side, again, I think another challenge is when we think about risk, we think about risks in terms of the buildings and huge risks there. So for example, most of our infrastructure, most of our homes in London are just not set up for the challenges of the climate ahead in terms of heat, for example. So there will be a need for a huge investment in that area. But actually, when I think about risk, the types of risks that I think about are really the big, supply chain risks. We heard earlier some great examples of what's happening to prices of cocoa around the world. We've seen, for example, the Panama Canal this year being shut down by drought, having a big impact on prices of key commodities. So these are sorts of risks that we need to be thinking about and getting ready for a world where we will see more of these types of events, more volatility, and getting prepared for that. But it's about thinking about this transition to resilience, a sort of resilient transition, and how we move along that. And my final point I just want to make is around the urgency. So I think another challenge we have on adaptation is it's seen as a long-term issue. It's seen that we can focus on mitigation now and think about adaptation later. That isn't the case. These risks are right now. And certainly, earlier you heard from Rianne-Marie from GFI about the nature work that's come out, which I had the pleasure to lead. And that showed that actually if you think about nature, which we need to do because it is very much interlinked with climate, fully interlinked, actually these risks are here right now. So, we showed in that work that you could see a 12% hit to GDP in the UK within the next 5 to 10 years. These are real risks that we need to be preparing for now.
Thank you. I want to come back to that how question you asked. And Matt, I'm going to move to you. So you got the how question, but I guess then there's the are we question. So how do we invest in this way? But are we actually investing in the right things? So Matt, I'm interested in, from your perspective, we have many investors joining us today. How do investors know that they're investing in the right things for adaptation? What's the role of quality of assurance and standards within that?
Thank you, Kieron. I must say, first of all, I was just very inspired by the words of Nicola in setting out both the challenge and the opportunity of climate adaptation and resilience. I think much of the focus is being placed upon net zero transitions and the enterprise level or disclosure level focus of carbon transitions, rather than the imperative of adaptation and resilience. To answer the question that you've raised to me, could I first of all just take a first question, which is, what is the standards framework? What is the assurance framework that will then help enterprises or projects or institutions or government bodies to be able to show that there's rigor in the implementation of appropriate measures? So that what we call the quality infrastructure is made up of a number of different bodies. There's public bodies, private enterprises. They are regulatory driven or they're voluntary driven. They're both national and international, and they come together in what we call the quality infrastructure. Now, there's a number of elements of them, and they help together to ensure that products are safe, consumers are protected, regulations are achieved, trade is facilitated, and imperatives such as sustainable development or net zero transitions or climate adaptation are delivered in practice. It's making sure that the promise of regulation or a standard is achieved in reality, and showing there's a rigor in that process and there's appropriate demonstration of the outcomes. So the elements of that quality infrastructure are, first of all, standards. And there's multiple ways in which those standards are created. We have in the United Kingdom the British Standards Institute. They're one of the largest standards development bodies. They hold the national catalogue of standards within the UK. But there's also many other standards bodies that form almost the promise of the opportunity of climate resilience, for example. And then we have accreditation bodies, such as ourselves. We're the United Kingdom Accreditation Service, and we ensure that conformity assessment, and that's in many different forms, but testing, for example, emissions testing for greenhouse gas emissions, or whether it's certification of a carbon transition program, or if it's inspection of the carbon capture methodology. All of those are done with integrity, with appropriate methodologies, and done consistently over time and in a impartial manner. And then there's the conformity assessment bodies. They are the bodies that we assess. And lastly, the metrology, and as well, there's market surveillance, and that's particularly driven from the regulatory side. So that has relevance and promise and opportunity for this market, because what we are all in is the trust business. We are there to ensure there's trust and confidence in imperatives such as climate change and climate adaptation. So we work together consistently as bodies in order to be able to achieve that nationally.
And where would you say we are on adaptation?
I think this is one of the big challenges. I think so much of the focus is being given at the moment to transition, to environmental management or social accountability or governance. So much focus is presented towards disclosure rather than actually delivering the outcomes. And at the moment, I think there's a real gap between the standards or the frameworks and the implementation in practice. Now, Nicola highlighted, this has got to come down to real practical opportunities of enterprises all around the UK and internationally. Now, there isn't the methodologies or frameworks or standards to be able to put that into practice. Now, we do have guidance standards. There's ISO 14090. That is a guidance standard, but it's not widely adopted or even known about in practice. So we've got to turn this opportunity or this challenge into an opportunity of delivery by scaling up those skills and the understanding of the relevant standards, because investors don't have the confidence that their investment is going to deliver in practice.
So much more needed. Thank you. Amal-Lee, I'll move to you if I may. So the world needs to adapt, but we know that the effects are unevenly distributed, and it is populations, particularly in the global south, who are going to be most impacted by the effects of climate change. How do we mobilise more private capital to consider adaptation, particularly in the global south?
Thank you. So for those of you that don't know, British International Investment, we're the UK's DFI and really an impact investor, so long-term patient investor. And we have been looking at adaptation resilience for, probably around 4 years now. And in our strategy, which is actually our strategy to be Paris aligned, adaptation is one of the key pillars. And we take the double approach, looking both at the risk and how we ensure resiliency of all our investments, and then the opportunity side. And I think, And we see both as equally important. I think the opportunity side is where we've been both internally but also with many of our DFI peers working to identify ways in which we can really start to accelerate and mobilize. And when I say mobilize, I mean, I think we're not talking about sort of billions to trillions at this point. I think what is clearer in the opportunities that we're seeing, and just to sort of clarify, we mainly invest in Africa and Asia. And in some markets, India in particular, we see a lot of opportunities. They tend to be quite small scale, early stage, more in the venture capital type space. So we're investing both through funds, but also directly into many of these companies. And whilst the scale in terms of investment size might be quite small, from 1 million to 10 million, maybe a little bit, larger, obviously greater through funds, the impact can be very significant in terms of number of people reached. And so we've been actually leading a collaborative with, it's called Adaptation Resilience Investors Collaborative, with other DFIs, engaging with other impact investors. And we've been looking at what is really needed to help us all invest more in the opportunity side, as well as also how we can all be more consistent in how we look at the risks as well, because we do need to ensure that we're being more consistent so that we're sending better signals to other investors. But on the opportunity side, as I say, I think that's the sort of the focus on VC and early stage is clearly where we're seeing most opportunities. But what became clear early on is that we need relevant metrics to understand the impact of those investments. So as an impact investor, we obviously prioritize impact and how we can really measure that. So we did produce a report under the collaborative. UNEP-FI is now the secretariat for the collaborative, so it can be found on their website. And we see that as actually, and it's interesting, having been here earlier in the day, I mean, I feel this is a theme that's come through pretty much every session. There was talk in the net zero session around the need for good KPIs, not just any KPI. We've seen it, obviously there was focus under the ISSB, but also interestingly in the nature. And so I think, what relates to how we have a sort of common set of signals that are being sent through a common set of metrics as well. Because I do think, given the complexity of adaptation as a private sector investment, we have to simplify as much as possible in terms of the types of metrics by which we're assessing and identifying the results that we can really deliver through these investments. Greenhouse gas emissions is a simple metric for mitigation. For adaptation, we need a more sophisticated understanding, but we also need to ensure we have a common set of...
And to put you all on the spot, I mean, what would you call out as some of those simple metrics that can be prioritised around, perhaps don't get the complexity of everything, but are enough to coalesce activity?
I mean, broadly speaking, we've identified them as relating to three main areas: people, planet, and economy.
Yep.
So people in terms of resiliency, services delivered.
Yep.
And, as an impact investor, that might be via us investing in a fund that, in fact, a good example, we made a commitment to a fund, a climate insurance fund in April, Blue Orchard, that actually is providing, will provide affordable climate-related insurance to low-income communities. So being able to demonstrate and show how that impact reaches those communities is obviously key. The other two being planet and the links to nature, and I think very much, the importance of having ecosystem services and not sort of allowing those to then be lost, or looking to help regenerate and rebuild those, because those also can be very important from a resilience point of view. And then economy, so looking at avoided losses through different types of adaptation services or technologies.
Thank you. A lot of resonance to the theme of a just transition, which has been coming up throughout today. We're starting to get tight on time, and I'd be interested in your advice as we head into COP29. What do you think is going to be most important to focus on around adaptation finance? Nicola, I might start with you.
Sure. Well, I think so. In the COP negotiations, they're always one of the big targets is around aligning finance, right? So and we often focus on one half of it, which is aligning finance with net zero, effectively. But actually, there are two sides to it, and the other side is aligning finance with climate resilient development, and that's always sort of hushed somewhat. And so for me, it would be that actually that becomes equal in focus to the net zero side. And I think the other thing that I'd love to see coming out of those negotiations, but also other fora, coming back to the targets and metrics point in particular, is that actually are sort of coming together around what are a key set of targets and metrics. And we don't just have to have one. So we did some work actually with UNEP-FI as well, where we looked at what are the existing standards out there, and to what extent are they already looking at adaptation? We found 300 different adaptation targets and metrics that already exist within existing standards bodies, IISB, GRI, etc. 300 of them. We found 35 adaptation taxonomies. So actually, we're not short of metrics and targets and taxonomies. What we're really short of is really good examples of how you use those in practice, and sort of boiling those down, as you have done, to what are the key ones we need to use for particular decisions. And I think that fora like the COP negotiations and various sustainable finance fora around the world can really help by getting people together to really identify, this is how these work, and really move that forward. And just to shout out one other one that we've been working a lot with is the Climate Financial Risk Forum in the UK, which set up its first adaptation working group this year, co-chaired by Ingrid Holmes and Kath Bremner. And that, when we set up that working group, we were not sure if anyone was going to turn up. We've had to turn people away. It's been so popular. Everyone asking these questions, everyone wanting to get involved, and actually sort of looking at what are the right targets, metrics, how do we use taxonomies, where are the opportunities. So there's a huge amount happening in this space.
Amal-Lee?
Yeah, so building on that, I think the global goal in adaptation is very much focused on looking at what kind of metrics are needed. And I think we need to recognise within the UN context, UNFCCC, we need to recognise the importance of moving away from a focus purely on volume of climate finance, because that's an input metric and it really doesn't provide us the information that we need or investors need to be able to demonstrate, are we really delivering on resilient pathways, resilient development pathways? I think related to that then is the new climate finance post-2025 goal, the NCQG, which will effectively create the new normative framework for climate finance. That, I think, has to have a very clear focus on the quality of the finance as well as quantum. Now, that has been considered as part of the process that is negotiating that, but thinking about those quality dimensions is going to be critical for adaptation as well as for more inclusion in terms of reaching low-income countries and low-income communities, whether that's for adaptation or mitigation. So quality as well as quantum of climate finance.
Thank you. Matt?
Thank you. I'd just like to again build on some of the comments my expert panellists have highlighted. And the diagnosis I gave earlier that there is significant fragmentation, duplication of effort, and inconsistent quality in the way that climate finance is delivered in practice. So we need to make sure that the standards that the panellists have talked about are implemented effectively in practice. Those KPIs, those metrics are highlighted, but it should be done through a robust framework with clear principles of delivery and impartial evaluation of that through verification of data that comes from those those projects and validation of any future claims of performance, of resilience or adaptation. I'd like to take a leaf out of the book and the excellent work that's been done by the Integrity Council for Voluntary Carbon Markets, or the Voluntary Carbon Markets Initiative, where they brought together what was quite a disparate landscape and it brought integrity and clarity to the principles. And I think that's something that we should look forward to in COP29 as more consistent collaboration to find that mutual recognition and consistent frameworks.
Brilliant, thank you. Well, we're going to have to call it there. That's been an important, a fascinating discussion. I don't know whether I'm optimistic or deeply concerned. I think both at the same time. The key most points I've taken have been around the importance of seeing adaptation finance as an opportunity, as well as a risk strategy, that we're some way behind on coalescing around standards. There's much work to do. And the necessity of this being a just transition. For it to actually work. Thank you ever so much. If we could thank our panellists in the usual way. Thank you.